Good evening, Manish ji.
Yeah, good evening, Poonam ji.
So, shall we start with us good session, healthy discussion starting for today?
Sure.
Good evening, everyone. Welcome to all the participants from Team CASA. Hope the earlier sessions were beneficial to our every members of Team CASA. On this third session on IND-AS, today we are covering AS 16, property, plant and equipment, and IND-AS 40, investment property. Our guest for the session is CA Manish Goyal. CA Manish Goyal is an eminent speaker on IND-AS, IFRS, financial reporting at various study circles of NIRC of ICAI. He has worked with MR MGF Land Limited and prepared IGAP based financials for Indian reporting purposes and IFRS based financials for Dubai reporting purpose. Manish has also been a part of Dalmia Bharat Limited, implementing IND-AS in first phase of implementation in India. Currently working with Apollo Tyres Limited, CA Manish is a regular speaker on IND-AS, IFRS, on in-house training programs. So today we are blessed with that session space with him, where he will be delivering a lot many knowledge impact on IND-AS 16 and IND-AS 40. So welcome Manish ji on this platform of Team CASA.
Thank you, Poonam ji, for this introduction, and also thankful to Sumit Garg ji for conducting this IND-AS session. Friends, today's topic is IND-AS 16 and IND-AS 40. Is my voice audible properly?
Yeah, I hope it's clear.
Okay. So IND-AS 16 talks about property, plant and equipment, and second IND-AS, which we will cover, IND-AS 40, which is investment property. Friends, IND-AS 16 property, plant and equipment is a technical word, but in our day-to-day language, we call it fixed asset. In general language, we call it fixed asset. IND-AS 16 talks about the accounting of fixed asset. Similar standard is there under Indian GAAP. Under Indian GAAP, there is similar standard. Which standard is there under Indian GAAP? Anybody would like to tell? For property, plant and equipment, which accounting standard is there? Friends, we will keep this session interactive. During the session, I will ask various questions, not to check your knowledge, just to interact with each other. And during the session, if you have any doubt, please let me know. So we have two types of standard in India. One, accounting standards. Second, Indian accounting standards. Under Indian accounting standard, for fixed asset, there is IND-AS 16. And for fixed asset, under accounting standard, similar standard is there. Which accounting standard is there? Let me see the chat box. I think participants are answering. Thank you, Radha ji. There is AS 10. Abhay Thakkar ji, very good, AS 10. Friends, under AS, there is AS 10, which talks about property, plant and equipment. So friends, I have a good news. Whether you read AS 10 or you read IND-AS 16, both are quite same. 99% AS 10 and IND-AS 16 are similar. There are few differences. Friends, IND-AS 16 is very important standard. IND-AS 16 is very important standard. Why IND-AS 16 is important standard? Friends, you will not find any company where there is no fixed asset. Whether it is a small company or it is a big company, any company you see, there will be some furniture fixture, there will be some computers, there will be some machinery if it is manufacturing. Otherwise, some computers or laptop will be there. If on that company IND-AS is applicable, you will find IND-AS 16 will definitely be applicable. Because of its applicability nature, IND-AS 16 is one of the important standard. Friends, if we look at the balance sheet of Reliance Industries Limited, This balance sheet is of 31st March 2021, one of the latest annual balance sheet. Total asset size of this balance sheet is 13 lakh crore. Total asset size of balance sheet is 13 lakh crore. Out of 13 lakh crore, total property, plant and equipment, this line item contribute 4,51,000 crore, which means 35% of total asset belongs to Ind-AS 16. Now with this, you can understand the importance of Ind-AS 16. So Ind-AS 16 is one of the important standard. Friends, the agenda of today's session is, first we will discuss the definition of PPE. PPE is the short form of property, plant and equipment. And we will keep this session totally practical. First we'll discuss with the definition. Then we'll discuss the initial recognition. Initial recognition means what are the conditions for recording a PPE in books of account. Then we will discuss initial measurement. Initial measurements means the value at which we will record the PPE, the amount at which we will record the PPE. Then we will discuss the subsequent cost. Once your asset is available for use, after that, if company incur any expenditure on repair and maintenance, whether we can capitalize those expenditure or not, that concept we will discuss under subsequent cost. After that, we'll discuss subsequent measurement. What is subsequent measurement? Subsequent measurement means measurement at reporting date. At what value we will measure the PPE on balance sheet date. Then we'll discuss the depreciation. What is depreciation? What are the methods of depreciation? Then we will discuss the derecognition and we'll close with the derecognition. So first, let us start with the definition of property, plant and equipment. So friends, definition of PPE is the base of this standard. The foundation of this standard is definition. If on any item this definition is fulfilled, Ind-AS 16 will be applicable. And if on any item this definition is not fulfilled, it is out of the applicability of Ind-AS 16. So on any item, if you want to apply this standard, you have to fulfill this definition. Otherwise, go to other standards. Now let us read the definition. Property, plant and equipment are tangible items which are held for use in production and are expected to be used during more than one period. This is simple definition. But for better understanding, what I have done, I have categorized this definition into three components. Effectively, property, plant and equipment are tangible. They are held for use in production and expected to be used for more than one period. We'll analyze each condition in detail. And after analyzing each condition, we'll see whether particular item is PPE or not. Property, plant and equipment shall be tangible item. What do you mean by tangible item? What do you mean by tangible item? Tangible means something which we can see, something which we can touch. Something which we can see, something which we can touch. For example, this machinery. This machinery is something which we can see and we can touch. It is tangible. This building is tangible or not? This building is tangible or not? This building is tangible because we can see and we can touch. Similarly, this truck is also tangible. It can be seen and it can be touched. Now come to this SAP software. If you have software in the company, can you see the software? No, software can't be seen and it can't be touched. It can't be seen, it can't be touched. Therefore, it is not a tangible item. Software is not a tangible item because we can't see that and we can't touch that. Therefore, it is intangible item. Therefore, it is intangible item, and IND-AS 16 will not be applicable on SAP software. Intangible, IND-AS 16 will not be applicable on SAP software. So which standard is applicable on SAP software? There is IND-AS 38. For intangible item, IND-AS 16 is not applicable. IND-AS 38 is applicable. This building is tangible. Now you can see all the item like furniture, laptop, car, calculator. All these are tangible except SAP software. Therefore, we have excluded this item from the tangible list. Now let us see the second condition. Property, plant and equipment held for use in production. Property, plant and equipment are held for use in production. For example, this machinery. This machinery is used for production of goods. This is PPE, which are held for supply of goods. For example, this truck. Suppose there is a company, Ultratech Cement Limited, which is having machinery, and machinery is used for production of goods. It is PPE. Ultratech is using truck for supply of cement from one location to another location. It is also PPE. For example, Ultratech is having one building in Delhi, and they are using this building as head office. Ultratech is using this building, which is chocolate color building, and they are using this building as head office. Whether this is PPE, answer is yes. Why? Because it is used for administration purpose. Now, Ultratech have another building. But this building they have given on rent. They are not using for their own purpose. They have two buildings. In one building, they are running their head office. Second additional building they have given on rent. Whether this second building, this one, is PPE or not? Tell me in yes or no. Tell me, friend, whether yes or no. Sumit ji is saying yes. Sumit Nanda ji. Ravi ji saying no. Anyone else, friends? Atul Mittal ji, yes. Suresh Prasad ji, yes. Okay, friends, thank you for your response. Friends, never think whether you are right or wrong. Think about the learning. We are learning, we are participating. Friends, there is separate standard. IND-AS 40 is there. There is separate standard IND-AS 40 which talks about investment property. What is investment property? Investment property is land or building or both, which is held for rental or capital appreciation purpose. I'll repeat, land or building which is held for rental or capital appreciation purpose, that is called investment property. Effectively, any immovable property which you are having for rental purpose, then it is investment property. So second building which Ultratech has, it has held for rental purpose, then it will fall under IND-AS 40. It will be categorized as investment property. So friends, accounting under IND-AS 16 is different than the accounting under IND-AS 40. Not only accounting, but presentation, disclosure is different under IND-AS 16 and IND-AS 40. I will discuss the accounting treatment as well as the presentation and disclosure of this building. So is it applicable for all asset? All asset which is given on rent is investment property? No. Only immovable property. Only land or building is investment property. Suppose you have this car which you have given on rent, then it is not investment property. Then it will be PPE. Only land or building will be investment property. What is the accounting treatment? We'll discuss later. Now, third condition is which are expected to be used for more than one period. More than one period means more than 12 months. More than 12 months. For example, this machinery, the life of this machine is 10 years. It is PPE. For example, this building, the life of this building is 60 years. It is PPE. This furniture, life is 5 years. This is PPE. There is a calculator. This calculator's useful life is 6 months. Tell me, is it PPE? Calculator is tangible, yes or no? Calculator is tangible, you can see and touch. Calculator is used for administration purpose. Second condition is fulfilled, but it is used only for 6 months. It is not used for more than 12 months. Therefore, third condition is not fulfilled. Hence, calculator is not PPE. So for definition of PPE, we have to check all three conditions. If all three conditions are fulfilled, step 1, which is definition of PPE, is fulfilled. Tell me, friends, any doubt so far? Any doubt so far? Thank you, Rishabh-ji, Ravi, Sadian-ji, for your response and making the session interactive. Any doubt so far in definition part, please let me know. Then we'll move to the initial recognition of property, plant and equipment. Rishabh-ji is asking, rental to others covers only movable tangible asset. Yes, movable tangible asset. If any movable tangible asset given on rent, then IND-AS 16 will be applicable. If it is immovable, then rental will be covered under IND-AS 40. Difference in property in respect of IND-AS 16 and IND-AS 40. I will tell you the difference. There is difference in the accounting. The subsequent measurement I will cover in subsequent slide. What is the difference between IND-AS 16 and IND-AS 40? Atul Mittal ji, I will cover your query subsequently because I will cover this concept under IND-AS 40. Okay. SGG asking, can I repeat the investment property with the purple building? So friends, there is Ultratech Cement Limited, which has one building which they are using for their horde office purpose, and they have another building which they have given on rent. This second building which they have given on rent, the building which they are using for their own purpose, that building will be covered under IND-AS 16, and the additional building which they have given on rent, that will be covered under IND-AS 40. Accounting under IND-AS 40 is different. I will cover the accounting treatment, but the building which you are using for your own purpose, that is called administration purpose, business purpose. But when you have this for rental purpose, it is investment property. Now I will move to the second concept. Initial recognition. Initial recognition. Initial recognition means conditions for recording a PPE in books of account. Conditions for recording a PPE in books of account. Suppose definition of PPE is fulfilled. Can I record this PPE in my books of account? Before recording of a PPE, I have to check these two conditions. If these two conditions are fulfilled, then I can record the PPE. What are these two conditions? First, that PPE will have future economic benefit. PPE will have future economic benefit and cost can be measured reliably. What is the meaning of future economic benefit? What is the meaning of future economic benefit? Future economic benefit means the PPE which you are using, either it is increasing the revenue, or it is reducing the cost. Anything it is doing, it means it has future economic benefit. Future economic benefit means Either it is increasing the revenue or decreasing the cost. For example, this machinery, Ultratech is using this machinery for production of cement, and this will increase the revenue. Therefore, this machinery will have future economic benefit. So future economic benefit could be increasing the revenue or decreasing the cost. So whatever PPE you are recognizing, you have to check whether that PPE will have future economic benefit or not. I'll take one example. Suppose Ultratech is going to construct a factory, and for this it has placed an order in China. Ultratech is planning to purchase, or even it has placed an order for purchasing a machinery from China. It has placed an order, and machinery will come after 1 month. 1 month is over. Machinery has reached in India. Now today it is the production time. The day when I am going to produce the goods from machinery imported from China, and this machinery fulfill the definition because it is tangible, it is held for production, and its life is more than 12 months. But the day when I'm using the machinery, the government brought a notification. Anything you import from China, you cannot produce the goods, or you cannot sell the goods which is produced from Chinese factory. Can you use this machinery for future economic benefit? No. Despite this machinery fulfill the definition, but this machinery will not have future economic benefit. You cannot record. So friends, you have to check the future economic benefit of that machinery. Second, cost can be measured reliably. How to measure the cost? We'll see in the subsequent slide. When you purchase the machinery on cash basis, when you purchase the machinery on credit basis, when you purchase the machinery through exchange, how to measure the cost, whether that cost can be measured or not. If that cost can be measured, then you can record the PPE. So friends, effectively for recording of PPE, 3 conditions relating to definitions will be fulfilled. 3 conditions of definition and 2 relating to initial recognition, which is future economic benefit and cost. Effectively 5 conditions should be fulfilled for recording of PPE. For recording of PPE, I think there are some queries. Birjesh Luthraji is asking, what if the building used for office is given on rent for a part of the year? We'll cover in the IND-AS 40. When I will discuss IND-AS 40, then I will cover this concept when partially a building is used for office purpose and partially for rental purpose. I will cover this concept. Atul Mittalji is asking, has provided the value in future? No. Okay. If a asset is ready to use but can be used partially due to the integrated building is not completely available to use it. Example, utility building is required for full. I think your query is not properly visible. There are 8 utility plant which will provide power to 2 plant. One is operational at 50% and other will be operational after 6 months. Whether these 8 utility plant would be capitalized or not. Pitik ji, can I take your query at the end of the session? Let me carry the concept because certain queries will be clarified for all the audience when they cover the other concept. If I cover all the concept, then we can have the open discussion so that it is good for the other audience. Because it will cover, it requires the other concept which I cover subsequently. So friends, we have covered the definition as well as the initial recognition. Now we are going to discuss initial measurement. Initial measurement. Initial measurement means your definition is fulfilled, your recognition criteria is fulfilled. Now at what value you will record the PPE in books of account. At what value you will record the PPE in books of account? Your conditions are fulfilled. Now, what about the amount? Now, under this measurement, we will discuss about the amount. And friends, this concept is very important because there is always a debate between auditor and auditee whether particular expenditure can be capitalized or not. From company side, I want to capitalize maximum expenditure to manage the profitability. But auditor always allow as per the AS or IND-AS. Auditor follow the true and fair view. Now to understand initial measurement, I have created a story and you have to listen that story carefully. Suppose there is a company, Tata Motors Limited. Tata Motors Limited has head office in Delhi. Tata Motors Limited is a company which has head office in Delhi. It has 3 existing plants in India. Suppose in South India, in Chennai, second in Calcutta, in East India, third in Goa, in West India. Tata Motors Limited has head office in Delhi. It has 3 plants in India, and it is going to construct another plant, another factory in North India, which is Manesar, Haryana. Suppose this is Manesar, Haryana. Here, Tata Motors Limited is going to construct a new factory in Manesar, Haryana. Now, for this, Tata Motors Limited is purchasing a machinery from XYZ Limited, Mumbai for rupees 10 crore. For this plant, for this factory, Tata Motors Limited is purchasing a machinery of rupees 10 crore from XYZ Limited, Mumbai. This 10 crore is what? Purchase price. This 10 crore is what? Purchase price. So at what amount we will recognize the PPE? There are 3 components. 1, 2, 3. So 10 crore is the purchase price. Suppose XYZ Limited charge GST at the rate of 10%, which is 1 crore. Can I capitalize GST in the cost of asset? Tell me friends, 10 crore is the purchase price and XYZ is charging GST on that machinery, which is 1 crore. Will I add GST in the cost of asset? Can anybody answer? Thank you, Rishabji. Rishabji is saying yes, if we not take the credit. If we not take the credit, then it can be credited. Then it can be capitalized. Thank you, friends. Thank you, Varsaji. Thank you, Sureshji. So with respect to GST, we have to check, are we taking credit? If we are taking credit of GST, then GST portion cannot be capitalized. If we are not taking credit, then you can capitalize. If you are taking credit, you cannot capitalize. If you are not taking credit, then you can capitalize. Suppose Tata Motor Limited is importing the machinery from USA vendor. It is not purchasing from XYZ Limited. It is importing from a vendor which is in USA. And while importing, it is paying certain import duty like custom duty. Whether that import duty will be added in the cost of asset. Whether that import duty will be added in the cost of asset. Answer is yes. Answer is yes. So in first component, we have to add the purchase price plus any import duty plus any non-refundable tax, means non-sanvatable GST, minus any trade discount given by the vendor. So this is first component of your cost of the factory. Thank you, Sumit ji. Thank you, Rupesh ji. Now, friends, second component of your cost of asset. Second component is directly attributable cost. What is the meaning of directly attributable cost? Directly attributable cost means any cost which is incurred for bringing the machinery to their present location and condition. Bringing the machinery to present location and condition means for running the machinery, whatever cost you incur, for running the machinery, whatever cost you incur, that cost is called directly attributable cost. For example, you will have to bring the machinery from Mumbai to Manesar, and you will have to incur transportation cost. Suppose transportation cost is 10 lakh. Whether this 10 lakh transportation cost can be included in the cost of asset? Answer is yes. If you are going to construct a factory, you have to transport the machinery. Otherwise, you cannot produce the car. So transportation cost is the directly attributable cost. Now, friends, machinery has reached in Manesar. Now, machinery has come there. But machinery will not produce the goods automatically. You are required to do installation and engineering. Whether installation expenditure or engineering expenditure can be capitalized. Whether installation or engineering expenditure can be capitalized. They are directly attributable cost. If you don't install the machinery, production will not start. So installation, engineering are directly attributable cost. Installation and engineering are directly attributable cost. Now, friends, this is the project side. This is project side. Installation is done. And there are two people who are working in accounts department. Company has deployed two staff for taking care of the accounts of this factory only. Now, whether salary of those accounts staff can be added in the cost of asset? Whether salary of those two people who are dedicatedly doing the accounting of this project can be capitalized? Answer is yes. You are constructing the factory. That's why they are deployed. If you don't construct, they will not be deployed. It is directly attributable cost. So effective answer is you construct the factory, expenditure will be incurred. You don't construct the factory, expenditure will not be incurred. These expenditure are called directly attributable cost. Now my question for all of you. I have a question. There is head office of Tata Motor in Delhi, as I have told you in the beginning, and they have 3 existing plants. This is 4th plant. They have 10 existing accounts staff in head office, and this 10 existing staff is working for these 3 plants. Now they are also working for the 4th plant. Now the salary of these accounts staff is being allocated to these 3 plants as well as for the 4th plant. Can I capitalize the head office allocated expenditure to cost of this factory? Can I capitalize the salary of head office existing staff salary to the cost of factory? Sumit ji is saying no. Astosh ji is saying yes. Suresh ji is saying no. MD Faisal ji is saying no. Abhay Thakkar ji no. Sonam ji no. Very good friends. Very good friends. You got the concept. Concept must be clear. It is not like we have to remember forever. Concept is आपने मशीनरी आप न्यू फैक्ट्री कंस्ट्रक्ट कर रहे हैं, आप एडिशनल सैलरी पे कर रहे हो हेड ऑफिस में? नो. The salary of 10 people are being already incurred for 3 plant. Now they are allocating for 4th plant. That is not the additional staff. So that is not a directly attributable cost. Head office allocated expenditure will not be capitalized unless they are dedicatedly working for that plant. Unless they are dedicatedly working for that plant. This is one of the important concepts under this IND-AS. Now friends, this machinery is ready. This machinery is ready for the production, but before launching the product in market, they have to conduct trial run because they want to see the kind of product this machinery is doing. So any expenditure incurred in trial run can be capitalized or not? Tell me friends, expenditure incurred during trial run can be capitalized or not? Ravi ji, thank you. SG ji, thank you. The audience are very participative. Very good friends. Really pleasure to see this kind of audience who is participating and they are gaining the concept. Trial run expenditure can be capitalized because friends, company will not produce the goods immediately and start selling. They will first conduct the trial run. It is the business practice. So any expenditure incurred on trial run will require, and any cost will be added in the cost of project, and any proceed during trial run will be reduced. Now friends, aside, now this trial run is done. This is the time for opening ceremony of the factory, and Tata Motor Limited has invited Amitabh Bachchan ji. They have invited Amitabh Bachchan ji for the feeta cutting for opening ceremony, and they are paying 1 crore. Now this 1 crore paid to Amitabh Bachchan ji can be capitalized or not? Can I capitalize opening ceremony expenditure in the cost of asset? Yes, no, yes, no. Rupesh ji is saying no. Akhil ji is saying no. Sachi ji, no. Not being advertisement expenditure. Thank you, Faisal ji. Sachi ji, no. Suresh ji, no. Very good, friends. And answer is, you all are correct. You all are correct. You know the reason why this expenditure cannot be capitalized? Because today you are inviting him because he is the celebrity. Tomorrow you don't know what will happen to his image. Today you have invited him because he has good goodwill in the market. But after 2 days, there is deterioration in his image. Your product will have the impact. For example, Shahrukh Khan, you invited the Shahrukh Khan, and you are incurring the expenditure, you capitalize that. Tomorrow his image is down in the market. That a capital expenditure which you have capitalized has no impact. Therefore, this advertisement expenditure cannot be capitalized. Advertisement expenditure cannot be capitalized. So friends, under initial measurement, we have discussed only 2 portions. One, this purchase price. Second, directly attributable expenditure. Now there is third concept, which is decommissioning liability or asset retirement obligation. Friends, this is the new concept which came under IND-AS, and before AS10 was revised in 1st April 2016, this concept was not there. But now this concept of asset retirement obligation is added in AS10 also. So what is this asset retirement obligation? Friends, when Tata Motor is constructing the factory, the land is given by Government of Haryana. Government of Haryana has given land to Tata Motor for 10 years. And there is a condition. Condition is what? After 10 years, you have to vacate the land. You have to decommission this building. You have to decommission this machine. And you have to provide me the land back after 10 years in the same condition on which I have given. Now, Tata Motor is okay for this. But the point is, Tata Motor can estimate after 10 years to decommission this plant, I have to incur a cost. After 10 years, when I will decommission this plant, I have to incur, suppose 1 crore. And the present value of that 1 crore is 10 lakh. So present value of asset retirement obligation, I have to capitalize in the cost of asset. I will debit the property, plant and equipment, and I will credit the decommissioning liability. This is the entry which I will make. Suppose करो 10 साल के बाद मुझे 1 करोड़ इनकर करना है फॉर असेट रिटायरमेंट, तो मैं क्या करूंगा? 1 करोड़ की प्रेजेंट वैल्यू कंप्यूट करूंगा, विच इज सपोज 10 लाख. 10 लाख में पीपीई में डेबिट करूंगा और 10 लाख में डीकमिशनिंग लायबिलिटी में क्रेडिट करूंगा. जो मैंने पीपीई में डेबिट किया उस पर तो डेप्रिसिएशन लग जाएगा 10 साल में, और जो क्रेडिट है डीकमिशनिंग लायबिलिटी में उसको मैं इंक्रीज करूंगा इंटरेस्ट कंपोनेंट से. आई विल डू द अनवाइंडिंग ऑफ डिस्काउंट. आई विल ट्रू अप दिस वैल्यू and at the end of 10 years, this 10 lakh will become 1 crore and I will settle this liability. I will settle this liability. So you can see here, present value of estimated cost of decommissioning liability will be debited in PPE and credited in decommissioning liability. PPE will be depreciated and decommissioning liability will be increased by finance cost. So this is decommissioning liability. So friends, under initial measurement, we have discussed three components: purchase price, directly attributable cost, and decommissioning liability. Any doubt so far? If you have any doubt, please let me know. As far as initial measurement is concerned, as far as the definition or initial recognition is concerned. Okay, friends, we are moving, and if you have any doubt, we can cover at the end of the session, because most of the queries Kamal Sharma ji is asking treatment of decommissioning liability. Okay, so friends, the journal entry of present value will be PPE debit. If it is debited in PPE, it will be depreciated. एंड डीकमीशनिंग लायबिलिटी में क्या होगा, हर साल में फिनांस कॉस्ट डेबिट करूंगा, डीकमीशनिंग लायबिलिटी क्रेडिट करूंगा. इनिशियली तो 10 लाख है, और नेक्स्ट ईयर सपोज करो मैं 10 लाख ऐड करूंगा, फिनांस कॉस्ट डेबिट 10 लाख, डीकमीशनिंग लायबिलिटी 10 लाख. फिर नेक्स्ट ईयर आई विल ऐड फिनांस कॉस्ट डेबिट 10 लाख, डीकमीशनिंग लायबिलिटी 10 लाख. तो 10 साल में मेरा फिनांस कॉस्ट का एक्सपेंडिचर आ जाएगा 90 लाख, और डीकमीशनिंग लायबिलिटी पहुंच जाएगी मेरी 1 करोड़ रुपए, और 1 करोड़ रुपए को मैं सेटल कर दूंगा, डीकमीशनिंग लायबिलिटी डेबिट और बैंक क्रेडिट. दिस विल बी द ट्रीटमेंट. इज इट क्लियर फ्रेंड्स? Somebody is asking if any intangible asset is attached with the property, plant and equipment, how treatment will be done. If any intangible asset is attached with the PPE, then we have to see the materiality. If intangible item has materiality, then we will apply IND-AS 38. If PPE has material value, then we will apply IND-AS 36, IND-AS 16. But if we can separate the value based on fair value, if we can separate intangible and PPE, then we can apply IND-AS 38 and IND-AS 16 separately. Yeah, Kamal ji is asking if actual amount exceed or reduce the decommissioning liability. This is a very good question. Suppose I am estimating 1 crore as the decommissioning liability, and subsequently, and the present value of 1 crore is 10 lakh. But subsequently, after 3 years, the amount increases to the 1.5 crore. So I will change my estimate. I will compute the revised present value at the end of 3 years. And this change in estimate will be accounted for prospectively, not retrospectively. आपने जो पास्ट में अकाउंटिंग कर दी उसे आप चेंज नहीं करोगे. सब्सिक्वेंटली आपका फाइनेंस कॉस्ट का एक्सपेंडिचर बढ़ जाएगा. सब्सिक्वेंटली फाइनेंस कॉस्ट का एक्सपेंडिचर बढ़ जाएगा, और आप 1.5 करोड़ की जो भी प्रेजेंट वैल्यू आएगी उससे आप ट्रू अप करोगे फॉर द रिमेनिंग ईयर, इन द ईयर इन विच योर चेंज इन एस्टिमेट टेकन प्लेस. Thank you, Brijesh ji. If decommission cost is not known in the initial year, then how to proceed? Friends, as far as the practical life is concerned, Abhay ji, companies management know about the decommissioning. They have the experience. If it is new company, they are constructing the first plant, it could be the case, but they can take the industry experience. They can see the industry practice. Based on industry practice, based on the technical advice, based on the advice from the consultant, they can estimate the estimated amount of decommissioning liability. So friends, we have done the initial measurement. Now we are moving to the next concept. Initial recognition in special cases. Initial recognition in special cases. Suppose when you purchase a machinery on deferred settlement term basis, means on credit basis, how to recognize that PPE? Or when you exchange the asset. Exchange the asset means you have one asset, there is another party which has another asset. You exchange your asset with the other asset. So you will derecognize your asset and you will recognize the incoming asset. Now at what value you will recognize the incoming asset? So we will discuss these two different cases. First, let us discuss the when payment is deferred. So I'll take the example. Suppose there is a company X Limited which is purchasing a Tata Nexon car from Tata Motors Limited for rupees 10 lakh. I am X Limited. I am purchasing Tata Nexon car from Tata Motors Limited. I am paying 10 lakh and on the same day I am taking the delivery for rupees 10 lakh. I will recognize this car at the amount of rupees 10 lakh. This is one condition. Now there is another party, Y Limited. Y Limited is also purchasing the same car, Tata Nexon car with same feature from same vendor and on the same day. But Y Limited is asking for a credit of 2 years. Y Limited is asking credit of a 2 years. It is not purchasing on cash. Now Tata Motor is granting the credit period. But instead of charging 10 lakh, Tata Motor is charging 12 lakh for the same car on the same day. Tata Motor has released the invoice of 10 lakh for this car and it has raised the invoice of 12 lakh for this car on the same day, same car, same feature. X Limited recognized the car for 10 lakh. Now at what value Y Limited will recognize the car? At what value Y Limited will recognize the car? My question is to you. For 12 lakh or 10 lakh? Tell me, friends. Sumit ji is saying 10 lakh, Rishabh ji saying 10 lakh, Kamal ji saying 10 lakh. What about 2 lakh? Abhay Thakkar ji saying 12 lakh. SG saying 10 lakh. But Tata Motor is charging or raising the invoice of 2 lakh, 12 lakh. What about that additional 2 lakh? What will be the accounting treatment of that 2 lakh? Very good. That additional 2 lakh is financing for me by Tata Motor to Y Limited. So my car will be debited by 10 lakh, liability will be 12 lakh. And this additional 2 lakh will be finance cost over the period of 2 years. This is additional 2 lakh. It will be finance cost over the period of 2 years. That is why, friends, IND-AS are based on the substance, not on form. Despite vendor is raising invoice of 12 lakh, but the substance, the value of car is 10 lakh, not 12 lakh. So I will recognize my car for 10 lakh and additional 2 lakh will be finance cost. That is why these IND-AS are based on the substance. Substance is the value of car is 10, not 12. The 2 lakh hidden is finance cost. Second concept is exchange of asset. Suppose there is a company X Limited which has a building and it is exchanging the machinery of Y Limited. I am X Limited, I have a building. There is another company Y Limited which has machinery. We agree to exchange these assets. I will derecognize the building from my books of account at my book value. जो भी मेरी कैरिंग वैल्यू होगी उस पर मैं अपनी बिल्डिंग को डीरिकॉग्नाइज कर दूंगा, बट मैं मशीनरी को किस वैल्यू पर रिकॉग्नाइज करूंगा? At what value I will recognize the machinery? So friends, IND-AS 16 says the first preference you will give to fair value of asset given up. You have to check the fair value of the building. If you can determine the fair value, then at fair value of building you will recognize the machinery. Any difference will be your gain or loss. If fair value of building is not determinable, then you have to check the fair value of this machinery. If fair value of this machinery is not determinable, then the carrying value of this building will be recognition value of this machinery. So you have to check this preference. You have to check this preference recognized based on following priority: fair value of asset given up, fair value of asset obtained, and carry value of asset given up. So friends, these are the two special cases for initial recognition. Now we are going to discuss subsequent cost. Subsequent cost means what? I'll take the example of Tata Motors Limited. Tata Motor Limited has constructed the factory in Manesar. This machinery, this factory is ready for the production. Now, after production, when machinery is running, there is some regular repair maintenance is required in the machinery. There is some regular repair maintenance is required in the machinery. Now, what is the treatment of repair maintenance of this machinery? So friends, there are two types of repair. One is minor repair, second is major repair. Minor repair means repair which takes place in every 3 months or 6 months or day-to-day repair or suppose AMC, annual maintenance charge. If it is minor repair which is up to 1 year, then it will be charged to P&L. If it is a major repair means the repair which takes place in every 3 year, 5 year or 7 year, the overhauling of the entire plant where shutdown is taken for 5 days or 7 days. When major repair takes place, then you can capitalize the major repair expenditure. You can capitalize the major repair expenditure. Second is replacement cost. Replacement means what? Tata Motor Limited has purchased the machinery from XYZ for rupees 10 crore. And this machinery has one component which is turbine. This machinery has one component which is turbine. Its useful life is 7 years and its cost is 5 crore. The total machine is this. The total cost of this machinery is 10 crore. And out of this machinery, there is one component. Its cost is 5 crore and life is 7 years. After 7 years, I have to replace the turbine. Can I capitalize the replacement cost? Answer is yes. Can I capitalize the replacement cost? Yes, I can capitalize because it satisfies the initial recognition condition. And this is called component accounting. Component accounting is what? If the value of component differs materially from the value of main asset, then depreciation on the component and depreciation on the main asset will be charged separately. Depreciation on the main asset and depreciation on the component will be charged separately. If you are doing the replacement after asset is installed and that replacement has future economic benefit and cost of replacement can be reliably measured, then you can capitalize the expenditure. There is another concept, major inspection. Major inspection means Tata Motor Limited has one aircraft and it has purchased this aircraft for rupees 1 crore and it has life of 10 years. As per aviation rule, this aircraft required inspection in every 3 years. And for inspection, Tata Motor needs to incur 25 lakh rupees. Whether this inspection expenditure can be capitalized? Yes. Why? If you don't get the inspection done as per aviation rule, you cannot fly the aircraft. For flying the aircraft, you have to get the inspection done as per aviation rule. Therefore, this is necessary for the flying of aircraft. Otherwise, it is just a simple item. So major inspection cost can be capitalized. It is subsequent cost. Once aircraft is purchased and life is 10 years, but in every 3 years, you are getting the inspection done, which is necessary for flying the aircraft. You can capitalize the inspection cost. You can capitalize the inspection cost. So friends, we have done the subsequent cost. Any doubt so far? Any doubt so far? Otherwise, we can move to the remaining concept. If it is okay, then I can continue. Sumit ji is saying there is no doubt. Abhay saying there is no doubt. Okay, friends. Now we are coming to subsequent measurement. What is subsequent measurement? Subsequent measurement means measurement at balance sheet date, measurement at reporting date. At what value I shall recognize PPE in my books of account on balance sheet date. So friends, on balance sheet date, for measurement, there are two options. One cost model, second revaluation model. One cost model, second revaluation model. This cost model is simple model. Cost model is simple model. Under cost model, my carrying amount, my book value will be original cost minus accumulated depreciation minus accumulated impairment. Under cost model, my original cost minus accumulated depreciation minus accumulated impairment. This is cost model. This is simple and there is nothing any tricky point. Now there is second model with this, which is revaluation model. What is this revaluation model? Under revaluation model, my book value, my carrying amount will be fair value at the date of revaluation minus subsequent accumulated depreciation minus subsequent accumulated impairment. Now, under this revaluation model, there are multiple questions which we need to answer. First of all, what is revaluation model? When revaluation is applied, what is the accounting treatment of revaluation gain and revaluation loss? When I'm applying revaluation for one asset, do I need to apply revaluation on all the asset of the company? What is the accounting treatment of revaluation surplus, whether it is free reserve or not? We'll answer all the question because this is something which we need to learn in detail. So revaluation is nothing but the fair valuation as per IND-AS 113. You have to measure the asset either cost or fair value. So fair value you have to calculate as per IND-AS 113. Now, when revaluation is required to be applied, when to apply revaluation? When to apply revaluation? You need to apply revaluation when your carrying value, your book value differs materially with the fair value. For example, your carrying value is 10 crore and your fair value is 12 crore and there is 20% gap. Then you have to apply revaluation model. Suppose as on 31st March 2022, your carrying value will be 10 crore after depreciation, but fair value is 12 crore and there is significant difference which is 20%. You need to apply revaluation. If your carrying value suppose 10 crore 5 lakh, which is immaterial, you can avoid revaluation. You can continue with the cost model. So revaluation is applied when your cost and fair value differs materially. If it differs materially or significantly, then you have to apply revaluation annually. If there is insignificant change, suppose 1%, 0.5% or 2%, then you can apply revaluation in every 3 or 5 years. So this is the frequency of revaluation. If there is material difference, you have to apply revaluation annually. If there is immaterial difference, then you can apply in 3 or 5 years. Now there is another question. Suppose I have a building and I want to revalue this building. Do I need to apply revaluation to entire asset of the organization, to entire building, to entire computers, to entire furniture fixtures or laptop? No. If you are applying revaluation to a building, then all building has to be revalued, not all other asset. When you are applying revaluation on any asset, then that entire class of asset has to be revalued. So building is one class of asset, computer is one class of asset, furniture is one class of asset. Suppose I am applying revaluation on this computer, then all computer in one legal entity has to be revalued. It is not necessary to revalue the machinery. Now I'll take the example of Ultratech again. Ultratech has 3 buildings. One they have in Delhi, second they have in Calcutta, third they have in Chennai. The value of Delhi building is up. It has gone up. The value of Chennai building is down. And the value of Calcutta building is flat. It is not changed. Ultratech want to apply revaluation on Delhi building, and it does not want to apply revaluation on these 2 buildings. Can Ultratech do so? Can Ultratech do so? Can Ultratech do so? Sumit Jananda ji saying no. Akhil ji saying no. Astos ji saying no. Thank you, Kamal ji. Thank you, Abhay Thakkar ji. Answer is no. Friends, when company is applying revaluation for one asset, then all the asset in that class. So company has to apply revaluation for all the building. All the building. There is no pick and choose concept. So this is the concept of revaluation. This is the concept of revaluation. Now let us see the treatment of revaluation gain or loss. Treatment of revaluation gain or loss. Friends, if revaluation is up, suppose 10 crore become 12 crore. If revaluation is up 10 to 12, what is the accounting treatment? This additional 2 crore gain will be recognized in other comprehensive income. If there is revaluation gain, this revaluation gain will be recognized in other comprehensive income. If there is revaluation loss is recognized in P&L. Friends, revaluation gain will be recognized in OCI and revaluation loss is recognized in P&L. What is OCI? OCI is nothing but the extended version of P&L, which is presented after PAT, profit after tax. OCI is a component of P&L, which is presented after PAT. And in this OCI, specific 9 to 10 items are recognized. And the nature of these items is non-cash and non-recurring. Na ek zyada na ek kam. Only 9 to 10 specific item is recognized, and revaluation gain is one of the item which is recognized in OCI. And through OCI, it goes to other equity. It goes to other equity. So friends, if it is revaluation gain, it goes to OCI. If it is revaluation loss, it goes to P&L. It goes to P&L. Now friends, what is the nature of revaluation surplus? What is the nature of revaluation surplus? Revaluation surplus is not a free reserve. You cannot distribute revaluation surplus as dividend. But there is one logic which we need to understand. Suppose the value of asset is 10 crore. You have revalued it to 12 crore. So you have added value in the asset by 2 crore. And this gain you have taken to the OCI. You have not recognized this gain in P&L. Now you will apply depreciation on 12 crore. You will apply depreciation on 12 crore, not on 10 crore, on revalued value. So there will be additional depreciation charge on your P&L. On your P&L, there will be additional depreciation due to revaluation. So there is a logic that additional to the extent of additional depreciation on revaluation, you can transfer revaluation surplus to retained earning. आप revaluation surplus को free reserve बना सकते हो annually by transferring some portion which is equivalent to additional depreciation on the revalued amount. जितना 2 करोड़ पर एडिशनल डेप्रिसिएशन लग रहा है एनुअली, उतना अमाउंट आप रिवैल्यूएशन सरप्लस से रिटेन्ड अर्निंग में ट्रांसफर कर सकते हो. बट जनरली कंपनी ऐसा करती नहीं है. प्रैक्टिकली वो क्या करती है, जब असेट डिस्कार्ड या डी रिकॉग्नाइज हो जाती है एट द एंड ऑफ यूजफुल लाइफ, देन दे ट्रांसफर द एंटायर रिवैल्यूएशन सरप्लस pertaining to that asset to retained earning in one go. So revaluation surplus can be transferred to retained earning when asset is derecognized or discarded. So this is relating to the revaluation surplus. Atul Mittal ji asking whether income under OCI is not taxable. I am not tax expert, Atul ji. Sumit Gupta ji is asking revaluation of factory land can be done. Yes, revaluation of factory land can be done. If fair value of factory land differs, if fair value of factory land differs materially with the carrying value of factory land, then you can apply revaluation. Any doubt so far on revaluation? Any doubt, friends? Please tell me any doubt, yes or no. The audience are very interactive. Can we go ahead? Revaluation is mandatory or optional? Rishabh is asking, revaluation is mandatory or optional? Again, I am telling you, when fair value differs materially, then it is mandatory. You have to apply revaluation mandatorily. If there is immaterial difference, then you can avoid it. If there is immaterial difference, then you can avoid it. Okay, friends. Now we are moving to the next concept, which is depreciation. Now we are going to discuss depreciation. What is depreciation? Depreciation is systematic allocation of depreciable amount over useful life. Depreciation is systematic allocation of depreciable amount over useful life. What is systematic allocation? Means you can apply depreciation by using WDV method, which is written down value method. You can apply SLM method, straight line method, or you can apply unit of production method. There are three methods of depreciation. Depreciable amount means what amount will be depreciated. The original cost minus residual amount. Original cost minus residual amount. And useful life is what? Useful life is period over which asset is expected to be used. Period over which asset is expected to be used. Now, which method company will choose? It is management estimate. Management can use WDV SLM. Unit of production method is applied in a certain different cases. For example, there are certain assets like projector. Projector comes with the number of hours. You can use the projector for 100 hours. Only 100 hours you can use. Suppose in 1 year you use for 10 hours, then 10 years, 10% depreciation you will apply. Next year you consume the 25 hours, then you will apply 25% depreciation. So unit of production is applied when asset is used. If asset is not used, under this method depreciation is not charged. Whereas under WDV or SLM, once asset is available for use, you have to apply depreciation. You have to apply depreciation. Method of depreciation, residual value, and useful life is something which management has to estimate, and management need to review it every year at financial end. Every year at financial year end. If there is any change in these three components, that change has to be accounted for prospectively. Suppose करो आपने यूजफुल लाइफ एस्टिमेट की 10 साल और 2 साल के बाद आपको लगता है कि नहीं यूजफुल लाइफ 15 साल होगी, तो आप रेट्रोस्पेक्टिव चेंज नहीं करोगे, आप प्रोस्पेक्टिव चेंज करोगे आफ्टर 2 years. After 2 years you will apply depreciation for next 13 years, not for 18 years. So this is the concept of depreciation. This is the concept of depreciation. Now friends, any query so far as IND-AS 16 is concerned? Now we are going to discuss derecognition, which is the last concept of IND-AS 16. Derecognition means when property, plant and equipment will be out from books of account. Recognition means recording. Derecognition means when your PPE will be out of the books of account. So carrying amount shall be derecognized either on disposal, when you dispose the asset, you will derecognize, or when there is no future economic benefit. There is no future economic benefit. Like I have taken the example, when Ultratech purchased the machinery from China, there was no future economic benefit. So you have to derecognize the asset. Under derecognition, if there is any gain or loss, that gain or loss will be recognized in statement of profit or loss. In statement of profit or loss. Any query so far under IND-AS 16? After that, I will cover IND-AS 40 because there were various queries in the beginning relating to IND-AS 40, which I will cover when I will speak on IND-AS 40. If it is clear, say yes, so that I can move ahead. If IND-AS 16, it is clear, then I can move ahead. Friends, under IND-AS 16, I will summarize what I have spoken. I have spoken about the overview, that this standard is important. Then I have discussed the definition. Under definition, we have discussed three things. First, tangible item. Second, held for use for production or administration. Third, expected useful life is more than 12 months. This is definition. Then we have discussed initial recognition. Under initial recognition, there were two conditions. One, future economic benefit. Second, cost can be measured reliably. After initial recognition, we have discussed initial measurement. Initial measurement has three components, where we have taken the example of Tata Motor Manesar plant. First, purchase price. We have purchased machinery from XYZ Mumbai. Then we have discussed the directly attributable cost, like transportation, installation, trial run, opening ceremony. Then we have discussed decommissioning liability. After initial measurement, we have discussed subsequent cost, repair and maintenance, replacement cost. Then we have discussed the major inspection of the aircraft, which is owned by the Tata Motor Limited. After that, we have discussed subsequent measurement. Under subsequent measurement, we have discussed cost model or revaluation model, when to apply revaluation, what is the accounting treatment of revaluation, what is the accounting treatment of revaluation. Then we have discussed depreciation. Then we have discussed derecognition. Now I will take the query of Pratik Mantriji. Right, this is right time for taking this query. Pratik ji is asking, there are 8 utility plant which will provide power to 2 plant. Right, one is operational and second one will be operational after 6 months. Whether these 8 utility plant would be capitalized or not. Friends, there are 8 utility plant. If 8 utility plant are ready for use, then the cost of 8 utility plant can be capitalized because they are capable of generating power for the one plant. Your second plant is not ready. There is no question of second plant, but your existing 8 power plant are ready to provide power to the first plant. It means they are available for use. Then you can capitalize the 8 existing power plant. Pratik ji, is the answer satisfactory for you? Because those existing 8 plant are ready for operation. Brijesh Luthra ji is asking how to do initial recognition at the time of transition from AS to IND-AS. Friends, when we move from AS to IND-AS, there are 3 options. There is AS balance sheet. There is AS balance sheet, and you have to make from AS to IND-AS balance sheet. Under IND-AS balance sheet, there is transition date. On transition date, there are 3 options. There are 3 options for recognition of your deemed cost. There is recognition of deemed cost. Deemed cost means either you can apply the cost on the transition, carrying amount on the transition, or you can apply the revalued value. You can apply the fair value or you can take the any fair valuation which is done in the past. You can take the fair valuation which is done in the past. Suppose 3 years back you have done fair valuation because of business combination, that value you can also take. So there are 3 options on transition date. Pratik ji is asking, yes sir, but no 100% future economic benefit will be available before second plant operational. Pratik ji, what is the, based on the fact which is available to me, your 8 existing plant are available for use. If the asset is available for use and it is capable of providing power to your first plant, it means these plants are ready for depreciation, even though your second plant is not ready for the depreciation. For example, friends, I'm taking the example of this laptop. I have purchased this laptop, but I'm not using this laptop. Will I apply depreciation? I'm not using the laptop. I have packed the laptop in my almirah. I will apply depreciation. Depreciation begins from the date when asset is available for use. Depreciation begins from the date when asset is available for use. Commencement is when asset is available for use. If your 8 plants are available for use and they are providing power for the existing 1 plant, then you can apply the depreciation. And cessation of depreciation either recognized or held for sale. So based on fact, what I can say, your 8 plants are capable of providing power to your first plant, then you can capitalize. Or if any further doubt, you can call me so that I can understand your fact better and I can analyze this. But based on the given fact, you can capitalize the existing 8 plant. Any query so far? I'll move to IND-AS 40. I'm going to unshare this PPT, and due to the paucity of time, can I move to IND-AS 40, friends? Okay. Is my screen visible for IND-AS 40? Say yes. Thank you, friends. Now we are going to discuss IND-AS 40. Friends, when we were discussing the definition of PPE, I took the example of Ultratech. Ultratech has one building, and in which building they are running their head office. And Ultratech has another building, and that other building they have given on rent. So nature of the asset is same. Nature means both are building, but the purpose or use is different. Use of the building is different. One building they are using for their own purpose, for their business purpose. Additional building they have given on rent. The accounting is different. I'll read the definition of investment property. Investment property is land or building or both, means immovable property, which is held for rental or capital appreciation or both. अगर आपके पास कोई इमूवेबल प्रॉपर्टी है और जिसे आपने रेंटल और कैपिटल एप्रिसिएशन के पर्पस से रखा हुआ है, तो वो आपकी इन्वेस्टमेंट प्रॉपर्टी होगी. सो दिस चॉकलेट कलर बिल्डिंग Ultratech is using for their own purpose. They will apply IND-AS 16. They will recognize as per IND-AS 16. They will do subsequent measurement as per IND-AS 16, cost or revaluation model, which we have discussed. But this green building, they have given on rent. This green building they have given on rent. On this green building, IND-AS 40 will be applicable, and accounting under IND-AS 40 is different. I will tell you. So any land held for long-term appreciation purpose is investment property. If you have any building for leasing or rental purpose, it is investment property. Suppose company has purchased a land for undetermined purpose. उनको पता नहीं है कि क्या करना है, whether plant लेके आना है या नहीं लेके आना है, they have additional fund, they have purchased the land, but they don't know whether they will use it for the capital appreciation purpose or they will use for the factory purpose. They have taken as for undetermined purpose, whether this is PPE or IP. So what is IND-AS 40 says? IND-AS 40 says, when you are purchasing a land for undetermined purpose, then it is held for capital appreciation. Then it is investment property. Then it is investment property. So effectively, friends, if you have any land or building which is held for your business purpose, IND-AS 16 will be applicable. If you have any land or building which is held for sale in ordinary course of business, then it is your inventory. IND-AS 2 will be applicable. If you have any land or building which is held for rental purpose, and rental is not your business, rental is not your business, rental is your additional activity. If rental is your ordinary course of business, then IND-AS 16 will be applicable. If you are doing the cement manufacturing business and rental is your additional activity, then it is IND-AS 40. If your business is renting, then IND-AS 40 will not be applicable because it is not given on rent, it is given on business purpose. Here we need to know the difference. If you are having various building and your business is giving the building on rent, then on that building, IND-AS 40 will not be applicable. It is not called rental, it is called business purpose because renting is your business. Right, friends? So we have to differentiate. The rental is your ordinary course of business, IND-AS 16. If rental is not in ordinary course of business, like for rental income or capital appreciation, then IND-AS 40 will be applicable. Friends, as far as initial recognition is concerned, the condition under IND-AS 40 and condition under IND-AS 16 are same. As far as initial measurement is concerned, conditions are same, but there is a difference under subsequent measurement. There is a difference under subsequent measurement. Under IND-AS 16, if you remember, there were two options. One, cost model, second, revaluation model. Either you can apply cost model or you can apply revaluation model as far as property, plant and equipment is concerned. But under investment property, revaluation model option is not there. It means on balance sheet date, on reporting date, you have to measure the investment property at cost only. You have to measure the investment property only at cost, but at the same time, you have to disclose the fair value. So I have told you under PPE and under IP, there is difference in the accounting, which is this. There is difference in the disclosure. You have to disclose the fair value under investment property, not in PPE. Under PPE, you are not required to disclose the fair value. And as far as presentation is concerned, on the face of balance sheet, like we have seen property, plant and equipment of Reliance Industries Limited. Similarly, you have to disclose a separate line item for investment property. There is separate line item on the face of balance sheet like investment property. So this is subsequent measurement of investment property. Now friends, I'll cover one more concept. Any query so far? Brijesh ji is asking if a company is preparing segment accounting, even then entire class of asset to be revalued. Yes, because we have to look at the legal entity basis. We have to look at the entire company basis, not on the segment basis. In one legal entity, there you have to revalue entire class of asset. You have to revalue entire class of asset. Okay, friends, we are moving ahead. Now there is a possibility. Suppose you have a building which is partially being used for your business purpose and partially you have given on rent. Somebody has asked this query in the beginning. So you have one building and this building partially used for your business purpose and partially you have given on rent. How will you account for? How will you account for? So friends, we have to see if part is capable of being sold, rented or used or transferred separately. If part of the building can be transferred or rented separately, answer is yes. Then one portion will be IND-AS 40. One portion will be investment property and one portion will be owner occupied property. For example, there is 3-floor building. Out of 3 floors, 2 floors you are using for your own purpose, for running the business, and 1 floor you have given on rent. Then on 1 floor, if that 1 floor is separately identifiable, on that 1 floor you will apply IND-AS 40, and on 2 floors you will apply IND-AS 16. Suppose in any case you cannot separate the, the asset cannot be sold or rented separately. You cannot measure how much portion I have given on rent. You cannot measure that. Then you have to see the significant use. Significant use means more than 50%. If it is significantly used for business purpose, then entire building will be treated under IND-AS 16. If it is significantly used as rental purpose, for 70% you have given on rent. I'm giving the hypothetical number, but you cannot measure how much percentage it has given on rent, but you know that more than 50% it is given on rent. Significant portion is given on rent, but you cannot measure how much. Then entire building will be treated as investment property. So based on significant use, you will treat the investment property or property, plant and equipment. Brijesh ji is asking, my question was, during the year for 8 months, it was used for business, but subsequently it was given for rent. So you have to see the reporting period. Suppose you are doing quarterly reporting, then you have to see on the reporting date, because the difference under investment property and property, plant and equipment on the subsequent measurement. So on the reporting date, which definition is being fulfilled? If you are doing this measurement on 31st March, then on 31st March you have to see the nature of use. If on 31st March nature of use is rental, then the entire building will be investment property. If on 31st March it is used for the business purpose, then you will apply IND-AS 16. Okay, Brijesh ji? So we have to check the nature of use on reporting date. Okay, friends, now I will discuss few key points relating to IND-AS 40. Yes, Abhayji, we have to check the nature of significant use. Now I will take one example. I am holding company A Limited. I have a building and I have given this building to my subsidiary B Limited. I am holding company A Limited. I have a building which I have given on rent to my subsidiary B Limited. Now in the books of A Limited, whether it is property, plant and equipment or it is investment property, A Limited standalone book tell me the treatment of the building which is given to subsidiary. I am expecting answer at least from 10 participants. Tell me, friends, I am holding company A Limited. I have given a building on rent to B Limited. Now in the books of A Limited standalone, whether this building will be investment property or property, plant and equipment. One answer, Rishabh ji, thank you. Abhay ji, thank you. Astosh ji, S ji, Sumit ji, Bijesh ji, PPE, Varsa ji, IP, Atul Mittal ji, IND-AS 16, Tausif ji, PPE, IP. I really like the way you are answering. Don't think whether your answer is right or wrong. I will tell you what is the treatment, but at least we are presented here. The point is, for holding company in standalone, my nature of this property is rental. For holding company in standalone, it is given on rent. If it is given on rent, for standalone, it is investment property. For standalone, it is investment property. Now tell me, in consolidated financial, A Limited is a parent. Now in consolidated financial, what is the nature of this building? In standalone, it is investment property. Now I'm expecting answer again from all of you. Thank you, Sumit ji. Varsa ji, IP, PPE. Friends, as far as standalone company is concerned, A Limited, for standalone, it is investment property. But if I club the account, if you look at the group, at group level, is it being used for the business purpose or for rental purpose? You have to think from the group purpose. For group, it is given on rent, or for group A or B, both are same, and B is using for the business. It means the entire group is using for the business. Then it is PPE. It is used for the admin purpose. Therefore, in standalone, it is IP, and in consolidated, it is PPE. So this is one of the key concept of IND-AS 16. Any doubts so far, friends? So we have done with IND-AS 16 and IND-AS 40, although very small standards, but very important standard. As I have told you in the beginning, that in any company, whether it is a small company or big company, you will find some property, plant and equipment, and you have to apply IND-AS 16. Now, if you have any doubt, please let me know, or if you have any feedback for the session, it will be grateful for all of you. If you have the feedback, now there is query from the Sumit Gupta ji, what to adjust value for rented property to subsidiary from investment to PPE. There is no adjustment. There is no adjustment. See, when the companies are preparing standalone financial, A Limited will account for as per investment property. When it will apply as per investment property, then it has to measure at cost. It has to measure at cost only. But for group level, it is PPE. And at group level, if they want to apply fair valuation, revaluation, they are free to do. But standalone level, they cannot apply fair valuation on PPE. They cannot do the fair valuation. Any query so far, friends? Thank you, Vinit ji, for your feedback. Thank you, Jagpal ji. And if you still have any doubt, my mobile number is given. You can WhatsApp me anytime, and you can email me your query relating to IND-AS 16 or IND-AS 40. I am really, it's my pleasure to see your feedback. And one good thing I would like to tell, that you all audience are participating. You have participated, and for the speaker, it is really a great achievement.
Truly
Thank
said,
you,
Manish ji. Truly said. And this all, this is the aura of Team Kasa. Everyone,
yeah,
the interactive platform for everyone.
I'm really thankful for the Sumit ji and Poonam ji for you for arranging this session, and it is great for the CA and all professional fraternity. And this session is this crash course, IND-AS crash course, will be very helpful, because nowadays IND-AS are very much in demand. since I am working with the Apollo Tire, I have worked with the Dalmia Cement, or lot of people are working in industry, and IND-AS has much demand. So try to read and take knowledge relating to IND-AS.
It's like the upcoming space. It will
Yeah,
occupy
it's
an upcoming
upcoming
space.
space. Yeah.
Hmm.
So now Brijesh ji is asking another query. How will the asset be adjusted with ROU of subsidiary? ROU of subsidiary means, Brijesh ji, can you clarify your fact again? It will be better for me to answer. See, for B Limited, it is a leased asset. So what will they do? They will eliminate the impact of ROU asset. In consolidated financial, they will eliminate the impact of ROU asset. Now they will recognize the PPE which they have given on rent at the group level. Now the individual accounting will be eliminated. Now the group accounting will be applied. So the impact of ROU, whatever they have done, they will have to eliminate in consolidated financial statement. Brijesh ji, is your query clear? Thank you. So Poonam ji, it is done.
Yeah. I was just actually waiting for if anyone has any query.
Yeah, I'm waiting for the query. No issue.
Exactly.
Yeah.
Rest sharing the certificate of appreciation with you, and on behalf of Team CASA and CS Sumit Garg, we are very happy that it was a very interactive session. Everyone enjoyed, learned a lot from every your session. So
Thank you, madam.
it was very delightful. It was very good. I think there is a query from Atulji.
Yeah, Atulji is asking treatment of assets taken on long-term lease, such as for 30 to 40 years. So the lease accounting will be done as per IND-AS 116. If any asset is taken on lease for 30 to 40 years, then IND-AS 116 will be applicable. Then you have to recognize that leased asset in your books of account as ROU and lease liability. So you have to see the IND-AS 116 session for detailed discussion, but you will recognize ROU as debit and credit will be lease liability. And on ROU, you will charge depreciation, and lease liability, you will account for as per IND-AS 116. Friends, still you have any doubt, you can call me or you can WhatsApp me.
Yeah, please. Sure. Definitely, any queries there, we'll be sharing the recordings also with all the participants, so that they further also keep on getting their queries resolved from the session. They can do their best.
Yeah, sure.
Please. Okay, sir. Definitely looking forward with many more interactive such sessions and long-term that bonding. We definitely today's acknowledge the session and just we go ahead with the closure of the day.
Thank you, ma'am. Thank you, Poonamji. Thank you for
Thank you.
giving me
Thank you
this
so much,
opportunity.
sir, for sparing your
Thank
valuable
you.
time space.
Thanks a lot. Thanks a lot.
Thank you, sir.
Okay.
Have a nice day.
Thank you. Same thing.